The earnings season starts off with Infosys. We'll tell you what to expect from the rest of the IT sector going forward. Our guest this week, Amrish Baliga, gives you 4 investment ideas for the long term. We'll discuss why you should be betting on these stocks. And the market ends flat after a volatile week. We'll figure out what your investment strategy should be. Welcome to All About Stocks. Thank you so much for tuning in. This is a show specifically meant for long-term retail investors. It's part of our bouquet of personal finance shows on ET Now, along with Investors Guide and the Property Guide. Both of those shows air at these times on ET Now. Over the next half hour on this show, we'll tell you what your investment strategy should be in these confusing times in our equity markets. We'll also answer all of the questions you sent in during the week. If you'd like to get in touch with us, our email ID is at the bottom of your screen. You can reach us on our Facebook page, and you can reach me personally on Twitter. Let us know what you'd like out of this show and how we can help you make smarter decisions in our stock market. A quick recap on how the markets did this week. The Indian markets gained more than 3% this week. The Nifty closed above that crucial 6,000 mark. The Bank Nifty gained about 4%. In fact, the Q2 earnings season kicked off with Infosys delivering better than expected numbers. Let me bring in my colleague Ajay to update us on those numbers from Infosys and what the street is expecting from the rest of the IT sector. Ajay.
Well, ahead of Infosys results, the sentiment was quite cautious. Academically, of course, the street was expecting a strong quarter. And finally, Infosys has managed to put a good show as far as the second quarter earnings is concerned. Profits were higher than estimates. And in line with expectations, they have at least hiked the guidance from the lower end of the range which they had indicated at. So the new guidance is 9 to 10% in terms of dollar revenue growth. However, tad short of on the upper end, but that's the classic Narayan Murthy way of going, calibrated and cautious as far as the guidance is concerned. However, this time round they have accepted that margins were under pressure and have guided towards pressure on margins at least for next 2 quarters. However, on a net basis, after listening to the management, one would say that the commentary and the results have risen hopes, at least for the rest of the sector. HCL Tech Mahindra, as well as TCS, now expectations are running even higher for these stocks. All the stocks reacted positively. The entire sector ran up after the numbers came out. Analysts are finally, after listening to the commentary from the management, are indicating that further upgrades could be coming in for the sector along with Infosys going forward. However, Infosys is expected to close the valuation gap between itself and some of the peers. Last couple of quarters, because of patchy performance, there was a big gap in terms of valuations which had emerged. And now on, after putting such a performance, perhaps Infosys will move higher and close the valuation gap which it got traded at past couple of weeks compared to TCS and Tech Mahindras of the world.
All right, Ajay, thank you for that information. Joining us today is Amrish Baliga, the Managing Partner of Global Wealth Management at Edelweiss Financial Services. Amrish has had a long-standing relationship with this show. He's been helping us, in fact, on the channel for nearly 5 years. It's a pleasure to have you here, Amrish. We saw Infosys come out. In a market where people were slightly pessimistic about corporate numbers. How are you rating what we saw from Infosys right now, and what do you expect from the rest of the season?
Infosys results were in line with what the market was expecting. The more optimistic of the people were actually looking at guidance being increased from about 10 to 12%. But then I think finally it's come at about 8 to 10%, which I feel is more or less in line. I suppose upside for Infosys could be capped at about 3350, 3400 levels. But I think even at these levels, I think one should just hold on to the stock.
Well, tell us about the rest of the IT sector in terms of TCS and HCL. I particularly am interested to know what you think of Mahindra Satyam at this point, or Tech Mahindra, Tech Mahindra at this point. What are your expectations from the IT sector?
IT space overall, I think, should continue outperforming. And I think TCS results should be much better than what Infosys showed. And the way we see TCS is, I think, quarter-on-quarter growth should be about 5%. HCL should show about 4% quarter-on-quarter growth. So overall, I think the results should be good.
The results should be good.
Yeah.
Is there anything you would like our viewers or our investors to be doing before these results come out, or should they be just sitting tight and watching for the results of this?
I think they should just hold on to the IT stocks for the time being, because at least the next 1 or 2 quarters still, continues to look good.
All right, so hold on to those IT stocks. In fact, we have a couple of questions for you, Amrish. Kaustubh has written in. He has 100 shares of Infosys, which he bought at 24.18. He wants to know if he should hold or sell. That stock, I'm going to put it back on your screen. It ended the week at 32.74. You did say we're looking at 33.50 at this point.
Right.
So you'd recommend he holds on to it?
I think we should just hold on to it. Because like 3350, 3400 levels is the level which we're looking at for possibly in the next 2 or 3 months. May not really go beyond that. But then if he's a long-term investor looking at the next at least 2 years, then I think we should just hold on.
So tell me something. There was this period when you and I have also discussed it, when
Right.
everybody felt that Infosys has become, a slightly slower company. It's too large to be managed at this point. There isn't too much growth we can expect from that company.
Absolutely.
Has that changed now? And are we expecting it to grow, at least alongside the rest of the industry for the rest, for the next couple of years?
It has changed after Narayan Murthy took over. But now I suppose we need to see the next 1 or 2 quarters whether it is consistent or not. Because, the problem with Infosys in the last 2 years was inconsistency. Now, in case we see consistent results coming from Infosys over the next possibly 2 quarters, I suppose it will move up the bar as far as the PE is concerned. I think that difference between TCS, HCL Tech and Infosys, I think that will narrow down.
All right, that difference will narrow down. In fact, we have a question, speaking of TCS, from Sameer, who has 40 shares of TCS, which he bought at 1945. He wants to know if he should hold on to that stock. TCS ended the week at 21.22. That's on your screen right now. Hold on to TCS as well. Then
Absolutely. Just hold on to that stock. And in case it's in line with what we're expecting, about 5% growth quarter on quarter, I think you should still continue seeing new highs for TCS.
Where do you see long-term value? If there's a stock that you could pick out of that entire basket, which one would it be?
Among the large caps, it's clearly TCS and HCL Tech. I think these are the stocks which will continue outperforming. Infosys, like I told you, unless I see consistency over the next 2 quarters, that may not be my top pick. That could be my third or the fourth pick. But the top 2 picks are TCS and HCL Tech.
Are you recommending any mid-caps at this point from the IT sector?
Mid-caps, KPIT Technologies is one stock which we are recommending, which we started recommending about around a week, 10 days back. And we see a price level of about 190, 200. Basically catering to the US markets. About nearly 70% of the turnover comes from there. And they've been growing through acquisitions. And we continue seeing about 16-17% sort of a growth in USD terms for this stock. So I think even at these levels, although it's moved up about 15-16 rupees in the past few days, I think even at these levels one can pick it up for a target of about 200.
All right. KPIT Technologies, that's Amrish's first recommendation on the show. That's on your screen right now. Remember, he has 4 stocks he's picked out for us, which he's going to give you through the course of the show. That's the first of those 4 stocks. I also want to talk about next week. We're going to see many big companies announcing their Q2 earnings. I'm going to bring Ajay back in again. He's going to update us on what to expect. Of course, right on top, Ajay, we're seeing RIL on Monday. What is the street expecting from RIL?
Well, that's correct, Faye. The next week will bring in a lot of large companies declaring the second quarter earnings. Of course, Monday, the first one would be Reliance Industries, where expectations are that the weak rupee and a good performance from their petchem segment will, put a brave face to this quarter, which has not been great on the refining front. Along with that, Indocent on Monday would put out numbers where asset quality concerns is a key factor to watch out for. Of course, 15th, HDFC Bank would be coming out with the numbers where 30% kind of growth, which they have managed past couple of quarters, will be something to watch out for, whether they keep that kind of a growth track record even this quarter. Along with that, TCS, of course, management commentary on growth is something what the street is watching out for very closely. 16th, Bajaj Auto is the large one, and though their exports have been growing pretty well, and there are expectations that this quarter will cushion earnings because of volatility in the rupee, the domestic business, remains a big challenge. So how they, progress on that one is something to watch out for. On 17th, Axis Bank, where their margins are expected to be under pressure this time round, along with HCL Tech, where apart from the other parameters discussed so far, deal commentary or commentary on the deal pipeline is something what the street is watching out for closely. In the later part of the week, Larsen & Toubro would be coming out. This time round, we've seen the stock add quite a lot of weight in the run-up to the numbers, and the order book growth or guidance from the Middle East in terms of order book growth is something what the street would watch out for. Ultratech and other cement majors have been trading quite strong past couple of weeks. The price hike which the sector has taken would be cushioning their earnings quite nicely. So a lot of big earnings lined up for the next week, especially from the index space.
All right, Ajay, thank you for that information. Amish, before we go into a break, I want to quickly understand from you what you're expecting from RIL on Monday.
RIL, in fact, we should see a growth of about 12 to 13% on the top line, but I think the bottom line would be more or less flat. But I think the most important thing in Reliance is the gas pricing, which I hope will get sorted out over the next couple of months. And I think that will be the biggest trigger for the company.
What is your advice for viewers who are watching at home who are holding RIL stock when they hear those numbers come out on Monday? What should they be watching out for?
In case you see some sort of downside in like RIL, I think it's a buying opportunity, because the way I see it is should not really go below 770, 780. I think that's the bottom for the stock. So any sort of a correction should be utilized to buy. Okay. In fact, I'm looking at a price of about 1150, 1175 over the next 9 to 12 months.
All right. I also want to talk to you about L&T. L&T has been one of your recommendations for several years now. We're expecting results to come out next week. So those of our viewers who are watching at home who are holding L&T or wondering if they should be adding it to their portfolios at this point, is it still a buy in your book?
It is still a buy, but I think one should wait for a small correction in the stock. We have seen some sort of a rally after the major crack which we saw in the last 6 months. So I think on a correction of about 5 to 6% from these levels, I think it should be bought, because that's the only stock in the capital goods space, stroke infra, where I think one can have a visibility of the next 3 to 4 years.
Well, Ajay also mentioned HDFC Bank. That's the other list, on the list of Q2s we're expecting next week. Again, this is another stock that you've always been bullish on. Are you still bullish on HDFC Bank?
Absolutely. Even at these levels, we are saying buy HDFC Bank. And in case the bank's overall crack, which is what we are expecting, surely you can't expect HDFC Bank to hold on at these levels. So in case there's a correction there, should be utilized to buy more, because this is one bank which will be showing you at least that 23 to 25% growth year on year. And so this is this is actually meant for a long-term portfolio. So any crack from here should be utilized to buy.
So when you talk about HDFC Bank in a long-term portfolio, is it then fair to ask for targets, or should we just hold this stock for as long as we need to?
I think long-term targets you should not ask for. I think since I said it's actually meant for a very long-term portfolio. But then if you want a target for the next 12 months to 15 months, I think one should easily see about 880 levels for this.
All right, so that's Amish's second recommendation on the show, HDFC Bank. I'm going to pull both of them up on the screen for you. Remember, we have 2 more stocks that he's going to recommend for us, that he's pulled up for us at this point. When we come back, we'll give you the names of 2 more of Amish's recommendations. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you so much for staying with us. Amrish Balika is still with us, helping us figure out our long-term strategy when it comes to our stocks. Now, Amrish has already given us 2 stocks that he thinks we should be buying at this point, one of which was HDFC Bank. The other one was KPIT Technologies. He has 2 more that he's pulled out for us that we should be buying at this point. Amrish, could you give us your other 2 recommendations?
The third one is Motherson Sumi, basically auto ancillary into electrical harnesses. The company has been growing at about 50% year on year. If you see the last 10 years, and we expect that to continue for a few years more. They have a tie-up with Sumitomo, which is extremely positive, especially for their export business. So even at these levels, I think one should be looking at buying it. May not really correct much from here, even if the market falls. And we are looking at a price level of about 400 if we're talking of the next 12 to 15 months.
Well, for someone who has a longish-term portfolio, how much of that portfolio should go into a stock like this? Because it's not a large cap, it's not a blue chip, it's a slightly smaller company. So would you like to cap our exposure to this stock?
Yeah, normally you should cap your exposure to the mid-cap segment. And I think overall exposure to the this segment should not be more than about 25-30% of your portfolio. And to individual stocks, I think it should not be more than about 3 to 4%.
3 to 4%. That's the maximum you can invest in a stock like this. What's your final recommendation?
Talwalkar. which again has been on my list for quite a while. Lifestyle stock growing at about 35-40% year on year, which again I see the visibility at least for the foreseeable 3 to 4 years. We saw a low of about 110, 115 for this stock. From there, it has bounced back to levels of about 130 and 140. I think one can even buy at these levels and keep some money for buying in case there's a correction. I don't see the stock really coming below 120, 125. And the final target price should be about 200, 220, what we saw last year.
There have been a couple of arguments against this stock right now. One is the fact that it was a fad. When the IPO opened, everybody thought it was really exciting. That sentiment seems to have faded away. Secondly, the fact that more people start to use gyms within their homes, within their buildings, so that fad is moving off. And finally, it is not a lifestyle product that can ever taper into Tier 3 or into rural India, so it has a limited scope. What's your answer to all of these arguments?
In fact, the growth for Talwalkar is not in Tier 1. It is actually in Tier 2 and Tier 3 cities and towns where they have done exceedingly well. If you see the growth over the last 12 months, it's been more on Tier 2, Tier 3. Regarding gyms in complexes, you require someone to manage it, and you require experts to do it, and that's another model for Talwalkar. So that's another growth area for them. And in fact, I don't see any slowdown in the fitness business. And these are one of the very few people who have actually got it right. If you want to, if you look at naming any national brands, there are just 2 or 3 which you can think of. And Talwalkar is number 1.
And Talwalkar is number 1. Also, would you like us to limit ourselves to 3% in this stock as well?
Talwalkar, again, I would say about 2 to 3%, not more than that.
All right, 2 to 3%. So remember, when you're investing in a mid-cap stock, however excited you might be about the prospects of that stock, it does make sense to limit it to 3% of your entire investable portfolio. I'm going to pull out all of those 4 stocks on your screen right now. Those are Amrish's recommendations. Now remember, on this show, every time he comes back, we're going to revisit these recommendations and see how they're doing. But we have a couple of questions. Our portfolio question is coming up next. Sumit has written in. He sent us his entire list of stocks. He wants to know which ones he should be holding or selling. He has a long-term horizon. He has 10 shares of Divi's Lab, which he bought at 986 rupees. Would you like him to hold on to that stock?
Yeah, in fact, Divi's faced some issues last year because of the power situation there, but I think that's been sorted out to a large extent. So I think even at these levels, he should just hold on.
He also has Hindalco, which he bought at 123 rupees. It's up around 44% in less than 3 months. Do you expect that rally to continue?
If he's a short-term investor, then I think he should book out to a certain extent. But I believe that the metal cycle has turned up. So if he's a long-term investor, just hold on.
Next on his list is NTPC, and he bought NTPC at 194 rupees. Now it's increased its installed capacity in Uttar Pradesh. But would you like him to hold on to that stock?
Power sector has seen, I think, one of the worst signs in the last 6 to 12 months, and I think, going ahead, things should look up. So at the current levels, I think you should just hold on, or possibly add a bit more of NTPC at these levels.
All right, last on his list is Tata Global Beverages, which he bought at 146 rupees. It's moved up, nicely since he bought it. But what would you recommend he does with this stock?
I think at these levels, you should just hold on. Starbucks also has started doing quite well. They've been growing decently well, and that should also add to the bottom line of this company. So I think at these levels, you should just hold on, looking at price levels of about 190, 195.
It's time for us to take a very quick break, but don't go anywhere. We're going to answer more questions when we come back. Email ID is at the bottom of your screen if you'd like to send us a question. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Amish Baliga is still with us, helping us make money in the long term. It's time for us to take a few more questions. Now, before we go any further, remember there is an email ID on your screen where you can send in any question you have about your stocks, whether you want to ask us about a particular stock or your entire portfolio, or you just have a question about something you have not understood in the stock market. It would be our pleasure to answer your question on this show. Well, we have a question from Lakshmisha who's written in. 50 shares of Rallis, which he's bought at 150 rupees. Should he hold on to that stock? He also wants to ask you if it makes sense right now to buy Dhanuka Agritech at the current levels. What's your recommendation?
Rallis, I think you should just continue holding on. Great brands, even their seed business is doing extremely well. So this is one stock for the long term. And around the same sector, I think, since he's looking at Dhanuka Agritech, even this stock could be bought. But he should not sell Rallis and buy this. If he has further funds, he should buy fresh in Dhanuka.
In fact, we have time to take one more viewer question. We have Valerian who's written in. He sent us his entire list of shares. He wants us to take a look at his whole portfolio and tell him which ones he should be holding on to. Right on top, 100 shares of Cox & Kings, which he bought at 157 rupees. That stock has come down to 90 rupees right now. What should he do with that stock?
I think looking at the amount of competition which is there in the sector, he should keep a stop loss, because this stock can actually go down much further. But looking at the way the markets are and looking at the momentum in the market, there is a possibility of a bounce back. He may not get 157, but possibly he could get about 110, 115 levels. So keep a stop loss of 85.
Alright, so which basically means if the stock ever hits 85, you sell out immediately. And of course, like Amrish said, don't wait for it to hit 157. If you get 110 or 120, then you should get out of that stock. 1,000 shares of Lanco Infrastructure bought at 14 rupees. That stock is down to nearly 6 rupees right now. Does he have hope at all there from Lanco Infra?
This is all-time low. Fundamentally speaking, there is nothing much to really talk about Lanco. I think it's one of the worst infrastructure stocks which are there. So, he needs to decide whether he can take a further loss of 6 rupees or not. If he can take a further loss of 6 rupees, possibly just hold on for a bounce back.
He also has Balrampur Chini, which he bought at 73 rupees. That's not doing very well for him either. It's down to 43 right now. What would you like him to do with Balrampur Chini?
Balrampur Chini, I think, can just hold on at this point of time. If you had asked me about a year and a half back when I was quite negative on sugar, I would have told him to exit. But at these levels, I think the cycle is slowly turning up. It may not turn up immediately. I think he'll just hold on for the next 12 to 15 months for Balrampur Chini. But I think from these levels, the downside is very, very limited. So just hold on.
He has 500 shares of Dana Bank, which he bought at 94 rupees. That's again down to nearly 50 rupees at this point. He's losing a fair amount of money on that stock as well. What's your call?
Although we are not bullish on the PSU space, but this stock has corrected quite a lot. So I think from these levels, the downside could be quite limited. From that point of view, I would say just hold on. But again, you should see a bounce back in the PSU space over the next 12 to 15 months. Although there's pain over the next 2 quarters, but I think he can just hold on.
Well, if you look at his portfolio, we've been through it right now. Can he use the 4 stocks that you recommended on the show as alternatives to what he has right now?
He could.
Or would you like him to add maybe a blue chip or a slightly more large cap stock?
No, see, if you look at the portfolio, there is not a single large cap. There is not a single blue chip in this stock, like in the portfolio. So if he has, fresh funds, because normally people don't like to book losses. It's very difficult for people to go out and book losses. What I would suggest to him is invest fresh in one of these 3 or 4 stocks which I mentioned. But look at the large cap one which I've given and not the mid cap ones.
Right now, I'm going to pull up the 4 stocks that Amrish recommended on this show. These are his 4 recommendations at these current levels. And if you have a question for him or about anything you heard on the show today, feel free to write to us. Email ID is at the bottom of your screen. You'll also find a copy of this show on our Facebook page. You can reach me personally on Twitter. Amrish, thank you so much for coming in and sparing time for us this weekend. It's always a pleasure to have you. Thanks so much for watching. Tune in next week to catch all of our stuff.